You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that music means it is time once again for the Option Block, a little program where we like to break down the world of options and trading and all that fun stuff. My name is Mark Longo, back in the studio, which is nice. So if I sound a little different from my traveling shows last week, it's because we're back in scenic and sunny Chicago. If I don't sound 100%, that's probably because I'm not. I must like you people, because I was pretty sick not too long ago, and yet I'm fighting through just to get a show out for you guys. That's how much I love the Option Block audience. But if I disappear for long stretches during the show, you'll know why. So hopefully I've got an able crew to help me fill in here as I battle with my fever dreams during the show here. Let's see who we got. Let's go on out first to a quiet, tranquil area where no one ever gets ill, and it's always a balmy 72 degrees. Of course, I'm talking about St. Charles, Illinois, where we are joined by none other than Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, how goes it, sir? I hope you're not violently ill.
I am not violently ill. I'm very happy to be here and happy to be healthy. And you know what, Mark? You're going to join the elite club of Chicago superstars. Walter Payton set the NFL rushing record when he had 103-degree fever back in the 70s. Michael Jordan had one of his best games ever when he was sick. And today is your day, Mark Longo, to be spoken of amongst the Chicago legends of performing while you're sick, because today is going to be a phenomenal show.
I like it. I can already see the image. We got to do a Photoshop of Mark's face leaning on a Photoshopped face of you as Scottie Pippen after the flu game. So I think that'd be amazing. So readers, listeners, you now have an assignment. I need to see Mark and Mike Photoshopped on Michael Jordan and Scottie Pippen. So
this is my flu game. I could see that.
It is. Go you.
That was a legendary day for him. We'll see if I could keep up. We had the voice means we're also joined by good old Mark, the Greasy Meatball Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, how go things, sir?
Things are good. It's a little funky today. The weather's kind of cruddy. The wind. This morning I was outside. I had to put away all of my furniture that we don't put away for the winter had been blown into the driveway. My recycling bin, let's say full trash can, had been blown across my house, up my driveway, and into my car. There were soda cans all over my driveway.
The wind was something. We're down here along the Chicago River, obviously, listeners, for our studio, and it was, shall we say, it was howling yesterday, right down between the buildings, right down the river. It was pretty fearsome. If you just listened to it from a distance, you'd think something horrible was going on outside, the way they were just whipping along out there, blowing. You could see the glass rippling on the buildings down the thing. You could just waiting for some of those windows to come popping out because they were blowing so hard. Thankfully, I don't think any of them did. So that was a good sign. Let's see if that's a good sign for the show as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, let's see what the heck we've got going on. I'm kind of catching up just like you guys are. I was enmeshed in my fever dreams not too long ago. So let's see what's been going on out here. As we're coming into showtime here, we're seeing most of the major indices up pretty firmly here on the day. S&P is kind of the laggard, only up a mere almost 0.5%. The NASDAQ's up nearly 0.6%. And the Dow leading the charge today, up a little bit more than 0.6%. So we're seeing old school economy making a bit of a resurgence out there. And our old friend VIX Cash is up about 0.6 point out there as well, a little bit north of the 14 handle, which means we got shy of the 13 handle, I should say shy of the 14 handle, into the 13 handle not too long ago. If you listen, by the way, listeners, of course, we didn't have a vol views. I was traveling last week, so if you heard that, you actually had a rare treat to hear the first ever episode of that program, which is interesting. Always fun to go back to the primordial ooze of shows and check it out. So fun stuff. So we didn't have a chance to do our vol prediction game this week. I don't know if any of us would have picked a 13 handle, but we shall see. Let's start with the Meatball. Mr. Meatball, sir, what is catching your eye in a bit of a weird day out there?
Yeah, well, we're right now we've got like a little weekend effect going, so we've managed to get back above out of the 13s and into the 14s again. But that doesn't mean vol's actually up. You can see VIX futures are actually down. There's a pretty nice contango, a pretty decent contango, and the S&P, it was threatening 2810 just a little bit ago, and it's right back to 2800. I was actually saying, you know what, I think this thing needs to pull back. I wish I'd have done the calendar spreads as I discussed. We got some individual stocks really moving since we've last talked. The stocks that are most interesting to me are KHC. You've got STMP, and you've got GE. All three, I think, are kind of fascinating. GE selling a business, it's up 9%. KHC, which is Kraft Heinz Corp., down another 2% today. It gave away 30% on Friday. And STMP, Stamps.com. We might be the only podcast that Stamps.com doesn't sponsor. And the one thing I'll say is
we don't do those generic podcast we're not Squarespace and Stamps.com. We go for the big fish.
Yeah, well, I think I would not be counting on a lot of that Stamps.com money coming in over the next couple days. It was down 60% on Friday. It's getting a little dead cat, up 17% today. But when you're a stamp company and you lose your U.S. Postal Service contract, people say, "Ooh, maybe that's not such a great thing." That's
a rough one. I guess they can always do Canadian Postal. I mean, what else can they do?
I don't know. But and then Kraft Heinz is a disaster. They had to write down like $1 billion out of Oscar Mayer, $1 billion out of Kraft. Just everything that they have done between there and Heinz, they didn't innovate, they didn't put money, they just slashed cost, and it's costing them. Warren Buffett cannot be happy. But GE looks like we're seeing some green shoots, as they might say, and that looks like it's permanently back into the double digits. Some other names moving around as well, but I think those are kind of the names that I'm kind of fascinated by today.
And I just heard one of those stamps.com ads not too long ago, and I kind of wondered to myself, I was like, what is their nature or their deal with the post office? I wonder if the post office, I mean, they like them because they're giving them business, but on the other hand, they could be seen as somewhat mildly competitive, and apparently the post office must have come to that similar conclusion. That's a big blow for their business. Interesting stuff. But yeah, I think I'll go for the Fidelity checks over the stamps.com paltry ones.
You don't want to be sponsored by MeUndies?
MeUndies, what else? Squarespace is the big one.
Oh, Squarespace is a big one.
All these remnant podcast advertisers. We don't go for that low-hanging fruit, listeners.
Hey, I'm all about Adam and Eve. Don't forget about Adam and Eve. They're a big one.
Are they a big one too? I have not heard those.
Oh, yeah, they're all over. So, yeah, you basically have those are like the four major podcast sponsors that people – that all my comedy ones are usually sponsored by. My
you listen to some different shows than me. That's why you're getting all the Adam and
Stuff You Missed
Eve.
in History Class, sponsored by MeUndies.
Yeah, they're sponsored by everybody.
You know what? The other one is Audio.
Audible. Audible is another one. Yeah.
There's the last one.
Yeah, all those fun remnant ads. When you can't sell other ads, you do remnant, and those usually fill the remnant stuff. That's a conversation for another day. Instead, let's turn to Uncle Mike, sir. Uncle Mike, what caught your eye or your ear or your trading dollars in today's interesting day, sir?
Well, I think what I'm seeing is that on Friday after the close, it looked like we had some progressive news on the China deal. So I think that did give the market a little bit of a shot in the arm going into today. The main sector that I'm seeing, the two main sectors, I'd say technology to some extent is driving this market, but the other one, well over 1%, is the financials. And so on this, with the news coming out with the China deal, I think ultimately, if China becomes good news, which it feels like we're kind of beating a dead, we're just kind of playing a broken record. If China becomes good news, I think financials are going to benefit tremendously. But in the meantime, typically financials do pay a dividend. So they have been, XLF anyway, has been a good buy and hold for us. We've been doing the wheel trade on it. But with XLF, with it being down like it was, I'm not a fan of selling cover calls when things are way down, because then if they go way up, then you don't go way up with them. And that's one of my reasons for such a thing. But no, I think that with what we have going on in the China deal, that's something that's definitely of interest. Along with what Mark was, just to add to what Mark said about volatility, we're starting to approach we just crossed the 280 level in SPY today. And so with that is a very, it's a big number, I believe, because we have had some issues with getting over it, even when we were rallying last fall. And so if we can hold 280 today, then I think that we could see more of a bull market and more of a bear market in the VIX space. But I'll leave that for the resident VIX expert on that one.
Speaking of talking VIX, let's see what was lighting it up in our most actives today. And Mr. Meatball, what's going up out there in VIX? Because they're putting up some numbers today. Coming to Showtime, is the whale back? It's like they've done over 2x their ADV already coming into Showtime.
Yeah, there was two massive trades that have gone up in succession. The first trade was a customer bought 100,000 of the April 23-26 call spreads, selling 50,000 of the April 12.5, 13.5 put spread. Even money. So that's not
bad.
I've heard that called a seagull. I've heard it called whatever.
Seagull.
I call it put spread. It's basically a protected risk reversal.
Yeah, it's a call spread with put kicker, or financed by puts, pretty much. Yeah.
And then there has been on multiple levels, they have bought about 125,000 of the April 2030 call spreads in VIX, paying between 49 and 51 cents. So that could be 50 cent at it, although he normally buys naked options. But that is absolutely a hedge setup. And you look at where VVIX is and you wonder why you wouldn't do that. Even with all this buying activity, it's still only 77. It's been below 80 for a while. The back spread that I've been talking about for weeks still looks really good. What other major trades have been up? Those are the two biggies. That actually more of that. There was actually somebody mixed the 20-30 call spread with the 12-13 put spread, and then we've seen, some call stupids and some a March call fly just got bought. this actually, I like this one. The March 1924-29 call broken wing fly for 16 cents. Not bad. I think the one, maybe the trade I like best is and it's the smallest trade, was the March 15-17 strangle for $1.66. I think that's a steal. Only traded 2,000 times, but that's a good price for that.
I think you got a decent chance of having that much movement through March. That's not a bad one. I was just going to say, this seems like there's a bit of outside of that strangle, it seems like there's a bit of a pattern to the flow out there today, which is upside financed by downside, or just a lot of upside. Are you liking any of those kind of even money verticals or things like that?
They look interesting. The trade I was actually kind of fooling around with was like a bear 1x2. And so I kind of looked at like the 13.5, 13 for a nickel credit, or the 14, 13.5 is trading for about you could collect a dime on that. And unless you think VIX is going to go to 1290 or lower, you're in pretty good shape. So those trades I think look specifically interesting to me. I also, if I was going to do an upside trade, I don't get why people are buying call spreads when the back spread I think looks far more attractive as a spread, and you can do that for nothing. If you want to sell the put spread, you actually get a credit. I mean, I can do the 1924 for about even money. Why wouldn't I? If I put on the 1924 call back spread and then I sell a put spread against it, that 13.5, 12.5. You're now doing that. You now have that back spread on for a pretty sizable credit. It's going to be pretty difficult to lose on that back spread unless you carry it through to the last, week, which would be ridiculous.
That would be ridiculous indeed. Let's see what else is ridiculous out there. Say VIX, like we said, doing a lot of paper today. Their ADV out there is about 440,000 contracts. They've already done about 970,000 coming into Showtime. So threatening 1 million already coming into Showtime as we just broke it down. So a lot of paper out there. SPY also pretty active, about 1.8 million contracts on the tape. The ADV is about 2.5 million out there right now. SPX, 670,000 contracts on the tape. ADV a little bit north of 1 million. Qs, about 427,000 contracts coming into the tape. 672,000, I should say, is the ADV out there. And IWM with about a little more than 250,000 contracts coming into Showtime with ADV about 330. Let's look at individual equity options. Our top 10 out here, most active. Number 10, Netflix, $1.14. Number 9, Facebook, $1.28. Number 8, Bank of America, 133,000. Number 7, Tesla, 137,000. Number 6, what is that? JD. Good old JD, 145,000. Tied for number 5. These are names with number 5. Names you don't see in the top 10 too often. NIO. NIO. That's also 145,000.
Interesting.
NIO
Another
Inc.
ADR.
This is an ADR. These are both. Are both ADRs here. Yeah. So both of them at 100. Maybe a little bit weird peer trade going on. Who knows?
Both of them. What do they do?
New
designs, manufactures, and sells smart and connected electrical vehicles. It manufactures autonomous driving electric vehicles integrated with next-generation technologies and artificial intelligence. So basically, it's a car you get into, and eventually it decides it doesn't like you and runs you into a building.
It turns into Skynet
off a cliff.
And it kills you.
Yeah, and I believe they're likely a Chinese company, certainly Asian, based on the officers being surnames. I'm not sure where they are located. Let's see.
The other one.
They're in Shanghai.
Yeah, the other one, JD.com, is
that's definitely a Chinese company.
Also Chinese. They used to be 360
JD.com is an online direct sales company. The company engages in the sale of electronics and home appliance products and general merchandise products, including audio, video products, and books, sourced from manufacturers, distributors, and publishers in China. So it's basically Amazon
Chinese
for China.
Amazon. Yes, Chinese Amazon.
Chinese Amazon. So basically it's Amazon, except it's all, instead of a dubious amount of forgeries, it's 100%
It's 100% forgeries. Yes. There's no respect for copyright or any sort of proprietary rule of law there whatsoever. Second, you have a successful product. It is aped by 8,000 other Chinese clones doing the exact same thing. If that's not enough international wholesale and retail for you, Baba, number 4, it's 174,000. A weird little strip here of international e-commerce going up here on the option market today. Number 3, AMD, 189,000 contracts. Number 2, good old Apple, 256, a little bit north of 250,000. Number 1, like you mentioned before, GE. That little deal they have going on there, driving some paper, 843,000 contracts out there. The ADV is 360, so doing nearly 3x their ADV coming into today. The most heavily biased to, let's see, any direction is actually that JD. 86% of that 145,000 contracts coming on the call side. Only 14% want to play in the puts. So heavily biased out there. They're not even moving that much. They're only up 1/4 of a point. Only up 1%. They're trading 26.22 right now, up 1/4. So yeah, it's that's interesting. I'll have to dig into the paper, see what's going on out there in JD.com as we keep on rolling into, let's see, probably an abbreviated version of the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Let's dance with the odd block. A little bit of an abbreviated one today. Like I mentioned, I was busy being violently ill most of the morning, so not a lot of time to parse the unusual activity. But we're going to instead go back into the archives and look at some of the names we talked about not too long ago on the show and see how these trades fared. Let's go back to, first off, Mohawk Industries, ticker symbol MHK. Right now, they're trading about almost 142, up nearly $1.40 or about 1%. Right now, this is the name we profiled back on the 7th of February, excuse me, where it looked like there was some aggressive upside going up in MHK right before their earnings, and to the tune of about 3,400 of the Feb 140 calls. That's where the action was, going up for $1.68. Looked like they were definitely opening one up on the Philly. It looked like they were leaning towards the buy side. There was the market was $1.30 at $1.85 going out when these went up. So clearly, probably buying, like you mentioned. OI was light, so it was definitely opening. And it seems like if you pull up a chart of good old Mohawk, timing wise, this was a pretty good trade, a good do, as we used to say over there on the floor of the SIBO, because we profiled these on the 7th, and the chart pretty much, it looks like a rocket ship straight up, starting with the 7th. So timing-wise, this guy knocked it out of the park. The stock gapped up from about 128 or so on the 7th, up to north of 140, about looks like 143 or so, or close to it on that, on high of about, looks like on the 13th, it spiked up to that. So in less than a week, it was up, and it was up aggressively. So this guy hit it out of the park from an underlying direction perspective. So sometimes the size money can be the smart money. Let's see how he fared, though. He said this is a weird one because he hit it out of the park. He put these on, a total of about 4,500 of these traded listeners on the 7th. All of that pretty much opening. So the OI was about that same level, close to 4,500. And then the next day, these traded, and our friend took them off. So they went up on the 7th, and he looked like he closed them out the next day on the 8th, because nearly 5,000, 4,910 traded on the 8th, and most of that OI closed. The OI dropped to about 1,000. So it took off roughly 3,400 of those contracts, which is weird because, let's see, what was the price that he put them on for? He put them on for $1.68. Excuse me. And let's see, they closed, this says here with the stock, these options, it says they closed at 70 cents on the 8th, which seems low. I'll have to dig into that. I'm not sure if that's correct. But the stock was about 135, almost 136. So I don't see how the stock would gap up. Granted, it was post-earnings, so we did see some of the vol, I do believe, come. Let's see, when was the earnings? I think they were right. I think they were the day after. So I think it was around the 8th. So we did see the vol coming in. So it is possible that they came out that 5th. But hopefully our friend did not take them off for around 70 cents because that, let's do a little bit of digging here to see. Let's go out to our old friend, the Trade Alert, the Flowmaster here, and let's go to Mohawk, and let's see what was going on the 8th of February, which is when all this traded. Yeah, we got the Feb 110 puts, Feb 140 calls going up for $1.05 and for 70 cents. A bunch of them went up for 70 cents. So our friend put them on. So he actually lost money on this trade. Oh, that's a shame. So Mr. Meatball, looks like we have a case of someone being extremely well timed in the underlying direction department, and then maybe just not. And if he had held on to these for a couple more days, these things would have knocked it out of the park because the stock continued to go up a total like over 10 handles over the next couple of days. But he got out too soon, and looks like he maybe took a bit of a bath. Maybe lost close to $1 on these bad boys. I don't know. What do you think of these? It looks like our friend had good timing, and yet maybe didn't have the patience.
Yeah, this is that story of when you don't fully understand volatility right before earnings, you can lose and be right. So, the 125, 130 strangle mark the day before earnings was about $12. So even though, anywhere in between less than 142 or above above 113, that the straddle lost. And so what happened was, even though the next day it was up $8, implied volatility fell 31 points. So it moved a lot less than the straddle/strangle was predicting. And so even though he was right, his upside calls got sliced in half. Really the only way for this guy to win would have been to go out and really buy like the 130 calls or like the 125s, because every single call was down on the day that was not that did not end up in the money at the day after earnings. Now, if you hold a couple of days, we were up $2 the next day and another $5 the following day. But this guy was a loser on those because volatility collapsed, unlike our friend that did KAR.
Yeah, that's a painful lesson in volatility right there. That's rough because this guy had it. He had it all. He had everything else in spades. He was right. He had it all right. And yet, that's rough. That's a rough. How I've lost track of how many times we've gotten that email. I bought calls in X name. Usually it's calls. That's not often puts. Usually it's calls. And it's like, I had calls in X name. Earnings happened. Something else happened, and the stock went up, and I still lost money. How is that possible? It's always a sad email to get. It's even worse to sometimes see it playing out here live in person with real money, which is weird. Speaking of friends, we got our buddy Mr. Flowmaster. He must have heard me using his system just now, looking up stuff. He says that the JD paper that we just talked about is a roll of a 7,500 lot call spread into a 12,500 lot call spread. So,
well, there you have it.
That's why it's 86% call paper in JD.
Yeah.
Which is funny. I should get Henry on here so he can fill some time while I just pass out in the corner in my fever dream. Instead, let's keep on rolling. This is how much I love you guys, the listeners, powering through. Talking about Mohawk when I want to just collapse in a heap, but I am. You want
to collapse into a Mohawk carpet.
I do kind of want to collapse into a, or maybe something I could buy on JD.com, which would be very nice.
That would be a Mohawk carpet from off JD.
Don't make me laugh too hard; it's going to kill me. All right, let's see. Instead, let's move on to our next name. Oh, this is our old friend Mattel. We talked about them back on the 4th of February, listeners, at the time. This was, I remember, kind of a bit of a weird one. It was, looks like it was just kind of just a call palooza. Someone was just coming in and buying, looked like they were buying, maybe legging into a vertical or just buying these calls outright. It was kind of a weird one. We'd had to do some parsing on this one back on the 4th. But effectively what we saw back on the 4th was some upside calls lighting it up in the weeklies. So these were the February 8th. They weren't even regular February. So they were going out in 4 days, which also made it interesting. The Feb 13 calls traded 5,000 times that day for 40 cents. Then we saw another 4,300 going up for about 43 cents, and then 15 calls going up 5,000 times for an eighth. So it was just kind of opening call paper, all on that kind of near-term upside strip there. Let's pull up our old friend Matt, see how they're doing. Mattel right now, 14, up about 0.5% today. And let's look back over the last month. This is another one. Underlying wise, Mr. Meatball, seems like our guy hit it out of the park here because you look at this chart and it spikes up on the 7th. Oh, by the way, the other one we just talked about, they had earnings on the 7th, so that is one of the factors, obviously, that just annihilated that vol. But Mattel looks like they popped on the 7th. They had earnings, I believe, they had earnings on the 7th as well. So, and they just took off. They were 12.36, then they were 15.25. The next day, then they got up to over 17 the following Wednesday, the 13th. Of course, the 13th doesn't help this guy because he was playing through the 8th. So let's see where it went out on the 8th. On the 8th, it still did all right. He went out 15.25. So let's see. I don't know. His 15s, he only paid an eighth for him, so he could still get out of those for doing all right. Let's see. But let's see how they went up here. So yeah, underlying wise, it seems like they worked out pretty well. I'm looking here. Again, let's pull up the Flowmaster system. Let's have that do the work for me, so I can just pass out. And let's see here. They traded a bunch on the 4th. Over 10,000 of these Feb 15s that were the 8th traded on the 4th. And then let's see. A bunch of them were still open going into the 8th. About 3,400. Actually, looks like they took all of them off by the 8th. So he took them off. I don't see all the blocks. I see a block of looks like 3,400 traded on the 8th, and then 163 traded on the 7th, but 10,000 traded on the 4th. I don't know where he took all the rest of that off, though, because the OI was about 9,300, and by the time of the 8th, it was gone. So I don't see where the other blocks were, but he did take them off, looks like. And then let's see, the 4th, for the 13 calls, 13,000 of those traded on the 4th total. And we only saw the big prints, but there's a total of 13,000. So it was a ton. Between the two, 23,000 calls went up on those two strikes, listeners, on that day. And by the time they went out on the 8th, another one. The OI was 0, so he took them all off again. We saw some chunks trading. Again, they must have traded some weird blocks here because I don't see them listed. 600 traded on the 5th, 400 traded on the 7th, and then 1,100 trading on the 8th. But the OI was 0 by the end of the 8th. So he took them off there as well, different prices. I'm going to go out on a limb here and say that this guy might have done all right. Let's see. It depends on, like I said, I don't have the levels where he got these off on, but given the fact that it moved that aggressively, and he didn't pay a ton for these, he paid 40 and 43 and an eighth. He had chances to, at the very least, scratch these bad boys. So, Mr. Meatball, it seems like we have two well-timed underlying plays going into earnings. Maybe less well-timed on the option side because they took them off weird. But still, what do you think of this one? Looks like our old friend Mattel doing all right, too. Yeah, no, it looks like that Barbie newborn pups commercial was effective, and that's why Mattel went straight up. So, yeah, Mattel seems to have righted the ship after, Barbie was an unmitigated disaster, but they seem to have gotten the Queen of Dolls back in her perch of selling stuff to little girls and to a lesser extent little boys. You know what killed Mattel, of course? They lost the Motu license. They lost the Masters of the Universe. So they did? They can't sell to people like me anymore. So Mattel is dead to me now. How can I stock my studio full of fun Mattel tchotchkes if they no longer make my good stuff? They don't own Masters of the Universe anymore? No, they sold it. Other people have the license now. So who? Smaller collector-type companies. Oh, that's ridiculous. Actually, that has such good potential. You'd think. They had a whole collector club going for it. You could get all these crazy things, remasters of things from the 80s. Which, by the way, Mr. Meatball, I just heard, you'll love this. If children of the 80s, if there's one toy we all kind of wanted, would have been a sweet Lego kind of Masters of the Universe thing. They just announced effectively a Lego knockoff. It's called Construct, something like that. But a Castle Grayskull set. So now you can build effectively a Lego Castle Grayskull. Right, that is something I may have to get. So I will be pre-ordering that when that is available. Yeah, that sounds pretty cool. That is pretty awesome. But it's sad. The third He-Man series was not that bad. The first one obviously was a classic. Terrible animation, terrible everything, but was just a classic.
It's the one that really ruined the franchise was the middle reboot that was just abysmal.
I never saw that one. I remember the old 80s one where everyone was very stiff at the waists and all wore loincloths.
Oh, yeah, well, they all had like they could do like a punching motion.
Yes, they all had very limited range of motion.
They all had loincloths on.
We need to do an action figure show on that. That would be pretty fun.
Maybe we need to make our official Option Block action figures so that we can.
Oh, I like that. You have to, you have to ask the listeners, what would each of our action features be? You know, what could our figures do? Maybe the meatball, he could spew something and Vicks would come out of his mouth or something like that. And Uncle Mike, Mike, he would his.
We're all option traders. We're clicking buttons. It's not going to be
Uncle
that
Mike.
exciting.
Uncle Mike's figure, he would hit a button and at his back, and he puts on a silver collar and watches it for 2 years, do nothing.
He's kind of like Uncle Mike's kind of like Ram Man. I'm like Orko.
You are very much like Orko. That's a perfect description.
And you're kind of like Man at Arms.
And if you were born,
I was just about to say that he is Man at Arms.
If you were born in the last three decades, you have no idea what we're talking about, listeners. Go look up Orko,
Tila.
and then put it next to a picture of Mark Sebastian, and you will
or
be.
Evil Lynn.
Yes.
Yeah, I was going to say on a bad day, Evil Lynn.
I have all
she
those.
toggles between Tila and Evil Lynn.
I have all of those qualities. Speaking of qualities, let's see what Uncle Mike's got in store for us this time with a little bit of the old strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
No offense to our other segments, but on days like today, Strategy Block is my favorite segment. Why is that? Because I get to pass out in a cheer while Uncle Mike talks. Uncle Mike, go for it, sir. Have at it. The floor is yours.
Wow, passing out in a chair. That's exciting. So today we're in IRA season right now. And so I want to go over ways with which to use options in an IRA and how they can be a very good tool. And I just want to go through a little bit of my playbook of some things that I like to do for myself and for my clients, because an IRA combined with an option is it's a phenomenal tool when you add the two of them together. When they were talking about eliminating options in IRAs a couple years ago, I mean, I have no business if that doesn't happen, and that vast majority of my clients I use these strategies I'm about to talk about. And so had they done that, I'm like, well, looks like I'm going to be a full-time football coach the rest of my life, and that is it. But with an IRA, you can do a lot of things with the option. Now, one of the biggest disadvantages of an option is that if you're outside of an IRA, if you make money on a Google call or strategy talks anywhere day to less than a year, you're going to be taxed at the short-term rate. And even if it takes longer than a year, you're still going to be taxed on it right away, no matter what strategy you do. And of course, if you lose, you can deduct that. But ultimately, the goal is to be a profitable option trader. And there's ways with which you can get around taxes and things like that. I'm not trying to discount any of that, but what I want to talk about today is the fact that within an IRA, you can get in, you can get out, you can get in, you can get out, and it means absolutely nothing to the tax man until you actually take money out of the IRA. So by getting in and getting out, I'm referring to getting into a call option, getting out of a call option or a put, whatever strategy you're looking to do. So I think that if you're not using IRAs as a tool, then you're really missing the boat on some really powerful things that can happen in the option world. So let's go through a couple of them to start with. Let's talk about a covered call, for example. Let's say that a stock is just totally stagnant and not moving, and you want to just do a covered call strategy on it, or selling puts, whichever one you prefer, whichever one makes more sense based on your synthetic analysis. If you're doing it outside of an IRA, every time you sell premium and you take it as profit, then you're going to have that on your 1099 at the end of the year. However, in IRA, it doesn't matter. I so love just talking to my clients, and they'll say, if they just have an IRA with me, they'll say, hey, are you going to send them the forms for the tax man this year? And I'll just say, nope, don't need any because everything's in an IRA. It's a very joyous conversation. So that's one area with which you can really take advantage of an IRA, just simply selling calls or selling covered calls or doing the wheel strategy that we've talked about on this show many times. Another way with which you can do it, let's say that you are an aggressive option trader and you're just buying and selling calls and puts for swing trading styles of strategy. Well, outside of an IRA, if you ultimately make money, you have to plan for how much money is going to go to the tax man at the end of the year. Inside an IRA has no effect on you whatsoever. So that's another way with which an IRA can be of great benefit to you. Now, of course, there's the 60-40 tax treatment that I talked about a couple months ago on the show on the strategy block. That can be an effective means of at least standing a fighting chance against the tax man. But I'm still a bigger fan of the IRA if given the choice. Obviously, if you have a lot of money outside of an IRA, then you have to go down a different route. Today's about the IRA. Now, let me tell you about probably my favorite strategy that I really enjoy and that the IRA is a staple to for this specific strategy, and that's the simulated index concept. So what I'll do with clients is, let's say that they have $80,000 outside of an IRA and $20,000 within an IRA. Now, I'm using even numbers just to kind of illustrate the simplicity of this point. But what we'll do with that is, let's say that that's their total net worth, and they want to have that money in stock exposure. Now, granted, and let's say, just to make it easy, let's say that we want to have another 100,000 they have in an annuity or a bunch of municipal bonds or something like that. They want to have 50% bonds, 50% stock, and then with this 80,000 outside the IRA and 20,000 inside the IRA, that's the amount that we want to have as stock exposure. But clients are a little bit nervous in case we're going to have another year like 2008 because they're getting a little bit closer to retirement. And they're also concerned that if we do have a big run up in the marketplace, that on the 80,000 that's outside the IRA, they're going to have to pay taxes on any gains that they have right away if they're looking to get in, get out, whatever the case may be. So what I like to do within the simulated index concept, take the $80,000 and we can put into something boring. Now, by boring, we could put into perhaps a municipal bond fund, an annuity, a life insurance policy, corporate bonds, or something to where it's tax favored. So corporate bonds would not be tax favored, but something that would be tax favored and boring, so to speak. And what is your definition of boring? That's up to each individual investor. And for their tax treatment, that's also up to each individual investor, depending on their situation, which we discuss. Now, with that $20,000 that's in the IRA, the neat thing about options is that you can simulate the index itself. You can set up a strategy to where you're buying calls, you're doing call spreads, you're doing diagonal spreads, you're doing a whole variety of things, whatever works best for the individual market. But what I like to do with it, and this is what I often talk about as the aggressive strategy on this show, is that we take a small amount of money and make it mimic a big amount of money. And that's the power of options. So let's say that the market just goes up to the high heavens and all these call options go way up as well. And let's say you get a 50% return with that $20,000. Well, with that, there's $10,000 and with the other $80,000, you get maybe a 2 or 3% rate of return. Maybe another, let's just say $2,000 there. And ultimately, with that entire $100,000, you're making roughly 12%. Now, by doing that, the benefit of this, and this is where the true power of options comes into play, is that you're making most of that money in the catalyst from the IRA money. Then, of course, the next year you can reallocate and maybe make 20,000 the calls, and then the other 10,000 of profits you can put into something boring within the IRA, or you can reallocate whatever you need every year. But my point is that the gain that you make on the money within the IRA, it is totally irrelevant to the tax man until you actually take the money out. So in other words, if you're maybe 5 years away from retirement and you're concerned about a big market drop, or you're concerned about getting dinged on taxes so close to retirement, this is a strategy that can be very beneficial to you if it's executed properly. And this is probably a very good percentage of my clients are in this situation where they have money built up outside the IRA, but within the IRA, they don't have a lot in it just because they're either a higher net worth and they couldn't contribute as much of their wealth to IRAs through the years, or for whatever reason it may be. So that's another way with which to think of how you can actually stand to get a very good benefit of using an IRA combined with the power of options. Now, the next question becomes, well, Mike, what if the market goes down in that scenario? That's a very good question. I'm hoping that all of our listeners are asking that as they're listening to their podcasts. If that's the case, number one, let's say the market were to go down 50% over the course of a year. Let's say we have another 2008. Well, keep in mind, the only thing that you have that's at risk to the market, assuming you did something really boring with the 80,000, is that 20,000 that's in the IRA. So even if you lose 100% of it, you're still limited in what risk you actually have. Now, let's say that maybe you want, I've also done this with a 90-10 allocation, depending on where volatility is, meaning 90% of the money is outside the IRA and 10% is in the IRA. Well, you know that because of the fact that options can only lose so much, you have that safety net there. Now, with that being said, I very actively manage that money that would be within the IRA in this example. And I've never lost more than, I think 20% is the most I've ever lost in that in all the years that I've been doing this. And I've been doing this for many, 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 many years. So my point is that active risk management is something that you can actually use to manage your risk with retirement money if it's done the right way and set up with the right allocations and the right sets of rules. Now, some other ways with which to use IRAs in the option world, I think it's important to note that you have this as a giant blanket, meaning the options that you trade within the IRA, they're totally sheltered from the tax man. The only time the tax man ever cares about taxing an IRA is, number one, if you contributed the wrong way. They may want to tax you for a penalty with that, but hopefully your accountant and financial advisor will stop you from doing that. But number two, when you take money out, that's the only time with which it's done. So I oftentimes like doing the simulated index concept, if possible, with a Roth IRA. The power of exponential rates of return can really be beneficial within a Roth IRA if you have the ability to qualify for it, because of the fact that when the money comes out of a Roth IRA, you're never taxed on it. So ultimately, I think it's very important to use the IRA as the right tool for what you're trying to do within your option trading. Another bit of food for thought on this is that you can combine this with a 401k as well. So let's say, for example, you have $80,000 within a 401k, and you have $10,000 in a non-IRA account, and you have $10,000 in a Roth IRA account. Well, one thing you could do within your 401k, and let's say you don't have a lot of choices with what you do within your 401k. Perhaps you can do some of the more conservative investments within your 401k, be all in bonds or all in government treasuries or something like that, where maybe you'll make a little bit of money on it. But then you make the catalyst for growth doing call options within the IRA. And then maybe the money that's outside the IRA, then maybe that's something that you can do with some type of a tax benefit, tax beneficial investment, i.e. like an annuity, a life insurance policy, or municipal bonds, depending on what your state you're in. Just FYI, we live in Illinois, so not one of my Illinois clients is in any type of muni bond, by the way, but I do have some clients that are in municipal bonds in different states. So remember, within the tools of an IRA, you can do a lot of things with it, and this is a very big part of what I do for my clients. And that is the strategy block for today, last Monday of February.
Yes, it is. And now let's keep on rolling and probably do a real quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Let's get to some of your questions here. Let's see. Got a 5-star review from Jake. He says, great content. Thank you. Well, you're welcome, Jake. Love the love. If you like what you're listening to, listeners, go on your platform of choice. We don't judge. iTunes, Google Podcasts, whatever you like. And feel free to give the review your heart feels is appropriate. All right, here. Let's see. What do we got? Euro20 wants to know, how do you play earnings that has a lower IV rank than IV percentile? And he gives us an example. You know what, Euro20, that's a great question. My brain is mush right now, so I don't know if I'm the right person to answer that. Plus, I want to clue in Matt and his team over there at ORATS on that, because they have all that great data on the earnings move report. So maybe I'll copy him in on that and let him run some back tests for us and see if they can crunch that one. We'll get to it maybe on a future show. But that's a good question there, and I'm just my brain is not up for it right now. Leg77, he's got a question about exchanges. Leg77 wants to know, MIAX is making it official with 16 exchanges. What do you guys think about more players entering the options game? Well, it's interesting. This has been some interesting news in the option space for a while now, and this, I think we have to take the word exchanges these days with a bit of a grain of salt. It's not like MIAX really has 3 separate venues. Excuse me. It's more different pricing models. And they have different medallions that are approved by the SEC. So in that regard, they are officially exchanges. But they have the same matching engines, same technology, same everything else, just a little bit different pricing model. Maybe it's maker-taker over here. Maybe it's taker-maker over here. Or whatever the heck the different rebate structure they want to have. And part of that is because the SEC won't let them play otherwise. The SEC won't let a venue trade a same asset at different prices on the same exchange. So as a result, if these exchanges want to cater to different audiences with price time, or they want to do make or take or whatever the case may be, they have to essentially spin up a new exchange. And for a group like MIAX or others, the cost of doing that, once you have one exchange up and once you have the matching engine and everything else, all the technology you need to run one exchange, the cost of spinning up another one is kind of de minimis. And if you can bring in even a fraction, a couple of % of business as a result of doing that, it's worth doing. So, they have different quote-unquote exchanges. Are there really 16 different exchanges in the option space? Not really. Most of them are really kind of different pricing models for the same thing. But still, that's what we're in these days. I don't know, Mr. Meatball, Mr. Uncle Mike, what do you think of the grand total of exchanges going up to 16 sometime soon?
I think I cannot wait for the day that the SEC finally says payment for order flow is illegal and we go back to 3 exchanges and volume is way thicker and there's actual liquidity and things don't get fragmented in 15 different ways. And I think it's kind of sad that we need that many exchanges, because that is the way the world wants. That's the way we're forced to structure things. It's kind of silly, and I don't think it helps the customer at all. In fact, I'm almost certain it doesn't help the customer.
Well, we see it a lot from the institutional side, right? They don't like having to connect to different venues.
No,
we see it with the market makers, of course. It's a huge tax on them. So that there are downsides to this, and we see it with the retail side too. The fragmentation makes it hard to get trades executed sometimes. So there are issues with all of it, but until the SEC really steps in to address this type of stuff, we're probably going to see more rather than less, as more of them continue to spin up different venues to be able to deal with there are different audiences in the option space, and they want to trade different ways and have different price structures. And in order to appeal to those people, they have to create these different venues. So that's kind of what we're going to be seeing, sounds like, for the foreseeable future. Broker than your broker. He says Walmart will never outperform Amazon. Amazon is doing way more than Walmart and has more in the pipelines. Well, there you go. Someone is long Amazon, I guess. He's liking himself some Amazon. We got weird people chiming in with all sorts of weird names. Mainstay says the Q4 call, Elon said leasing would negatively impact earnings. Wonder what it is, good, bad. He's writing all these numbers here for Tesla with stuff. This guy wants to know why we think Target is going to drop like a knife, Black Mace. We don't. We never said that. So people have all sorts of weird questions about different names on here. So we'll keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Let's see what everybody is looking at, keeping an eye on for the start of this trading week. Let's go to Uncle Mike first. Uncle Mike, sir, what are you watching?
Well, I'm looking at this. I think that what I'm looking at would be 2,800. I mean, today's going to be a key day with 2,800. And then still continuing to watch the macro news out of China. I don't know if there's really a lot of individual stock news that's coming out right now, but for the most part, China and 2,800. And I'd be excited to listen to Vol views this week to see how the market reacts on the Vol side to 2,800 if it does indeed happen.
If it does indeed. Mr. Meatball, same question, sir. What are you watching for the rest of this week?
Yeah, 2,800 on the 20th of February I thought was perfect. How about the fact there's 4 expirations this week? There's one today, there's one Wednesday, there's one Thursday, and there's one on Friday. How about that for a busy couple of days. This March, you know how many expirations there are for the S&P 500 this March? There are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. There are 13 expirations next month, and that is, only in the top half of months with expirations, which is kind of the craziness. So I'm watching that. I'm watching economics. We got a summit in Vietnam, which I think is going to have some importance. But really, I think just how do we react around this level, and where does VIX go? It settled below 14 on Friday. It's currently around 1430. Where are we going to land?
Where are we going to land, indeed? I don't know where we're landing for this week, but for this show, we're landing on our way out the door here, listeners. Thanks for joining us. I'm sorry I couldn't be 100%, but you got like a 60-odd% version of me maybe today. Maybe I'll be a little better by tomorrow's program. I'm supposed to have crypto later today, crypto rundown. I think we're having to reschedule that due to all sorts of great guests on that show, but their schedules are fluid all the time. So no crypto rundown later today. We'll be doing it tomorrow. It probably works better for me, gives me a chance to recover a little bit. And then tomorrow we got advisor's option, I believe, as well. So busy day coming up this week. And of course, later on this week, you got option block, file views, all the other fun stuff we do, TWIFO here on the network. Stay tuned for that. But before we go, let's go back around the horn. Let's start with Uncle Mike yet again. Uncle Mike, sir, if I'm intrigued by what you do over there, and perhaps I want to click on a Fox, where should I go? What should I do?
By all means, go to stcharleswealth.com for more information about what I do as a financial advisor. Would love to work with someone. Always have enjoyed working with listeners to our podcast, and feel free to check out my website and contact me at any time.
Check them out over there, stcharleswealth.com. And last but not least, Mr. Meatball, if I'm intrigued, maybe I don't want to make the mistake our friend here made today on the show of buying a bunch of premium right before earnings and then having it just melt down in my face. If I want to avoid that or other fun stuff, where should I go? What should I do?
Yeah, go to optionpit.com. We've got our next masterclass coming up on in March. You go to optionpit.com/master, and it is a 10-part masterclass. We're going to teach. It's for options for investors, money managers, and registered investment advisors. We're going to teach you how to better serve your clients and or yourself. If you are an Option Insider listener, email us and say, hey, I heard you on the Option Insider, and I'll rebate back $250.
There you go. Check them out. Optionpit.com. Money manager, retail, whatever the heck you are. Optionpit.com. The place to go. And on behalf of the Meatball and Uncle Mike, and indeed myself, it is nice to have the show over, I'm not going to lie, so I can go collapse in a heap. And then I'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.